Good morning, guys. I'm coming to you as a recording because for some reason I just cannot get the stream going today. I've tried literally 5 times to do this live, but it has not worked. So I'm going to try and do this recording. I'm going to try and smash it out all in one go so I can get this out to you as fast as possible. Before we get into the price action, I just want to talk about this. So Sam Bankman-Fried has been arrested. I don't know, what this means right now. One thing I think that is a bigger problem than anything else is what are we going to talk about on Twitter Spaces now? Because, this guy, this absolute fraudster that everybody was giving light to now no longer can boost their follower rate on Twitter. So these crypto influencers that were, giving him a platform and now going to have to find something else to do. But what I don't like about this, I find it very suspicious, and maybe it's just my suspicious mind. As you guys know on this channel, I am always suspicious of anything that I read or see. What I don't like about this is you can see here it says, the news of his arrest should come as little surprise given that last Friday the Department of Justice came out and said that it was closely examining his role in the multi-billion-dollar crypto exchange's recent collapse. But it says that they are down here, further down here somewhere, it says that they're investigating because, here we go, the FTX, no, it wasn't that one. It says that they're investigating the money that was moved after he filed for bankruptcy. So, not the fact that he just, took everyone's money, but they're more interested in the money that went missing after he filed for bankruptcy, and that's the money that they get in their hands. So they're not looking out for us. But also I just find this very, very suspicious and a massive setup that, they had all this time to arrest him and they didn't. And one day before he is due to, here we go, he was scheduled to testify before Congress, he gets arrested. So is this whole thing a setup? Was he told, go and agree to testify because it'll make you look innocent, like you got nothing to hide? Then we'll just arrest you so that you can't do it and it's not your fault and whoopsie, So I'm not buying any of this. Excuse me. I've got Restream reaching out to me trying to help me with my problem, but too late. Anyway, so I'm not buying that. But let's move on to Bitcoin price action and basically what we should look out for. We know we've got CPI. It is at 12:30 Melbourne time tonight. If we have a look here, we've got CPI and core CPI, which we would expect to be a market mover. But what I want to focus on in this video today is I want to go back through some previous CPI events and just have a chat about what really to expect, because it's very interesting when we look back over time what the CPI actually means. And so I'm just going to bring them all on here. If I can just find, here we go. All right, so on this, I'll zoom out to the 1 hour, and we're going to start back in April when it decides to find it. Here we go. Okay, so I want to show you a very, we weren't that far down, we were up here in April. I want to show you a very interesting not correlation, but something just to point out about news events that really, hopefully this is going to prove to you that it's about liquidity and not so much about what the actual news is and how the market moves. Now, I just want to change this because I don't want this on my chart. I want a different indicator. I'm not going to edit this video because I want to get it out to you as fast as possible. So just bear with these moments of being an absolute mess today. I just need to change something here. Let's put this as... Rightio. Okay, I'm ready now to actually smash some goals. So let's go back from April, and I want to show you here how the CPI, the delta, and the open interest all line up to give you a hint of what's going to happen regardless of what the actual news is. So we can see here, this was the only event where we had mixed results. So the CPI month on month was same as the forecast. The year on year was greater, but the core CPI was lower. Now, what matters and what I want to point out to you, I don't recommend you trade news events, but I do. So I, do as I say, not as I do. But I will say that it does take a lot of experience to do it. So here's the thing. When we have a news event where the delta, whether it's to the longs or the shorts, the delta in the open leverage positions, delta meaning how heavily we're swinging in open leverage positions one way. So if the delta is to the longs, there are a lot more long positions open than there are short. And the number, so if I say 21 billion, is 21 billion difference between longs and shorts. And when we have a news event that lines up with a very high delta at around the same time, the news event is usually used to wipe out that delta. And so what will happen is the news will come out on the very candle, like literally the 15-minute candle that the news comes out is the initial reaction. And that reaction will react to the result, right? So if the result says that it's good for currency, then Dixie will go up, everything else will just do a sharp drop down, and vice versa. However, the move doesn't last, and that's the point of this video, is that I don't want you to get stuck in trying to trade the news event because it will be one fast, sharp candle that you want to catch, because the real move actually comes after the news event. The news event itself is only worth scalping if you're an expert scalper. But there are certain other conditions that have to line up that make it worth trying to trade the news event in addition to the price action after it, or just leave the news event and trade again after, when the actual new trend starts. So when we have a look at back in April CPI, we can see here that the delta was 21 billion to the shorts. Now, that entire amount, so that would have come from everyone being short along here, right? People would have been terribly bearish, and then especially bearish leading into that news event. And then on the day, you can see here that we had that one sharp move down, but then that's it. We moved out from there. And in this small move here, the very next day, that 21 billion was wiped. Now, when you look at this as, just a pattern in itself, you can see here that a W formation was formed. So, and the second peak was after the news event. So if you had just traded that long instead, you would have had a much safer trade rather than trying to guess what was going to happen on the release of the news event. Because by the time you see it on the internet, the reaction's already happened. You're too late. You have to realize that we're trading against AI bots and things like that, and they can react in probably less than a millisecond. Humans can't react that fast. So unless you can preempt what the news event is going to be leading up, which no one can because we just don't have that information, then it's just too dangerous to do it. Now, there is a time where you can get more clarity leading up to sort of get an idea of what's going to happen regardless of what the result is. I'm going to get to that in another month, but this is an example showing you that when there is a very high level of delta leading up to a news event, it's likely that we're probably going to actually go the other way just to wipe them out the next day. So this shows you sentiment. Leading into a news event shows you sentiment, right? People were obviously very bearish. That was very easy for the market maker to just spike price up. All these late shorts down here on the day or on the week of that event got wiped out here and see how it doesn't take much of a move, because that's 21 billion that was wiped out in just this little move right here. So maybe shorts down here took profit, but these shorts here that were late, they didn't take profit and they got wrecked. So now when we move to the next month here, this one was a bit of an anomaly because this was right towards the very end of the lunar crash. So we had $56 billion worth to the short, $56 billion worth a delta to the shorts because of the lunar crash, and nothing was going to change that. No CPI was going to change what was happening in that month. So we'll move on from that month. This month here, we can see here that the result was higher than forecast. So if you go to Forex Factory and you have a look here, where it says actual greater than forecast is good for currency. That means it's good for Dixie, so it should be bad for the markets, right? So here it says it was higher, so it should be bad for the markets. Now here's a bit of a different scenario where when we were looking in this prior week before it actually came out, the delta was very flat. And this is what I always say to my guys in Discord is when the delta is closer to zero than anything else, so say 0 to maybe 4 billion, the market maker has to induce you to try and take a position because they need to get that leverage on the table. And if you have a look at the 2 weeks prior here where we weren't building it up, look how we moved up, 100% recovery, moved up, 100% recovery, moved up, almost 100% recovery. These moves here at the time, if you were trying to day trade them, would have felt very erratic. Here, you don't have a weekly cycle. You can't count 3 level rise, 3 level drop. It's just really, really erratic. The reason for that is the delta. Like the market maker wasn't able to get enough people to commit to trades. So therefore, we had this erratic price action to just try and get people to commit to something. Now, when it doesn't happen, they'll do that on the news event. And so we can see here that this delta was 2 billion at the time. The news came out higher than forecast, good for Dixie, bad for everything else. And we had a drop, and especially the fact that it lined up with a weekend. You can see here we've got wick down, wick up, fake move Friday, trap you into the weekend. And then from there we had the biggest sell-off. But look how that then grew the delta to 26 billion the following week. So they're either going to entice you into a position to wipe out the leverage that's already on the board at a news event, or they're going to try and entice you into position at the news event because they need to build it up so that they can wipe it out later because there's not enough people playing the game in one direction, right? And so that's what we can see happened here. Now, let's go to the next month here, because there's one very interesting month that I'm going to get to that I'm going to show you is the only time that I would trade a news event. So on this one here was also very interesting. It came out as higher than forecast. Prior to it coming out, we had delta of 18 billion to the shorts, which shows you sentiment. And this one in July, everybody must have been very, very bearish, thinking it was going to be really bad news. And then with this one, we had a final damage W here. So this on the news event, it spiked lower than the previous low, which is the final damage W. But look, by the very, very next day, the candle had returned to that drop. And by that next morning, the $11 billion of that 8 billion delta was wiped by the next morning. But have a look at this. If you had have just sat out of that and waited for a good trade, there was another W formation here and you could have ridden that all the way to the top. So much easier trade after the initial move is made. And it goes to show that if you've been noticing all of these ones so far, that the initial move that is made doesn't tend to last, other than that previous one in June that I just showed you, it doesn't tend to last. Most of these will have a full recovery following the actual news event. Now, when we move on to this one here in 10th of August, we had the same sort of situation. This one came out lower than forecast, which meant it was good for crypto. But see how it was just a short-term move? Like after this, we didn't really go anywhere. We just kind of went sideways for a bit and ended up coming back down anyway. So this isn't an indication. CPI isn't an indication of a long-term uptrend is kind of the point that I'm trying to make. And you're probably going to be better off trading it after than trying to trade the actual event. But again, prior to that, people were very, very bearish. There was $7 billion delta to the shorts. And then on the news event, one massive candle wiped it all out, all that leverage out. So if you don't pick the direction right, like you're kind of at risk of your trade just not going the right way. Now, this here is the perfect condition for a news event. And this is the only time that I would bother trading the actual news event as a scalper, but I would use the heat maps at the time to do it, which makes it a lot more difficult, and won't go into detail on how to do that on this video. But you can see here that price was moving up prior to the news event, and the delta had built at 22 billion to the long, right? So it came out as higher than forecast, but the delta was 22 billion to the long. This is how you would have known that this one was going to come down no matter what the news was. We actually did live trade this event together in the Discord. So if you're not in the Discord, come join us. The link is in the description of all of my videos. But the key to this one was not just that we had rising prices and high delta, it was the third combination of the open interest. That is the killer to trading a live event. If you have rising open interest, price moving in one direction consistently, and the delta getting to over 20 billion, that is a very key that you're probably going to get a reversal on a news event. And I didn't even need to know what the news was at that time. We knew that we were going to come down in the Discord. Now, just so that you understand how open interest works in a way, the point of it is that every side of a limit order is matched equally on the other side. So for every long position, a short position is open. And that is what rises the open interest. So when you see that happening, open interest rising, but price like not really doing much, like literally just creeping like this or just going sideways, especially towards the end here on that day, it was just going sideways. What that is, so if price is going sideways, but the open interest is rising, I think my cat just dropped something. What that means is that the market maker is matching every side of all retail's limit orders, and they're keeping price still. And they do that to build contracts to get ready for a stop hunt before they move price in a massive direction. And you can see here, hopefully there was that wick up there, which doesn't look like much now, but on the day, people would have had memento, people would have had this drawn as resistance prior because the wicks didn't go up there, right? So this stop hunt would have stopped people out. It would have also triggered long orders for breakout traders that may have had limit longs above price. So triggered them, get them stuck into a trade, stop out everybody else who's in a short position that actually got it right, but they just didn't have their stop in the right place, and then bang, sends it down. So these are perfect conditions for a news event. And it doesn't happen all that often. Moving on to the next one here, we can see here, again, same situation where it came out higher than forecast. The delta was flat at the time, but on that news event here, where this dropped here on the news event in a 15-minute candle, that delta went from 2 billion to 11 billion. Like that's a 10 billion rise. And this, when you zoom out now and you look at it, we're in a downtrend much earlier than that. So this is people who shorted way too late. And have a look at this candle. This is a 1 hour time frame. So within 3 hours, it was all wiped out, like in one candle. And again, if you're not experienced trader, or you can't think fast, you can't react fast to price action on a smaller time frame, you have to stay away from these things, because this was a classic trap of let's trap more people short. See how they held price sideways all day? They held it, spike to the downside, trap more people to go short, and then bang, send it the other way, wiped them all out. This is the typical move that happens in news events. Moving on to, what are we up to now? November. So this was the last one. Now, this one is similar to the lunar one because we were already in a downtrend from FTX. But here, look, see that one candle right there, that one green candle as the news came out. Again, this is a 1 hour candle, but this candle would be the same on a 15-minute time frame. Or let's just say even within a 1 hour period, we had $32 billion to the shorts on this move down, right? There was $32 billion delta to the shorts. $15 billion of it was wiped out on that candle. So the point being, don't make yourself a victim to this. The only time that it is worth trading a news event is when you have the triple combo of price moving in a direction on the day it starts to go sideways and do absolutely nothing. The open interest peaks at a really high rate. The delta is over 20 billion. That's the only time, but still you'd have to expect a stop hunt, and therefore it's hard to know where to place your stop loss because you don't know how high that stop hunt can trigger. Heat maps can help you decide that, but it's still a risk. So the point of this story is not to encourage you to trade the news event, although I know you probably all listened to this video and went, okay, that's how I'm going to trade the news event, but I'm actually trying to get you to not. However, when we now have a look at what is going on now, I cannot explain to you why I have two areas of interest here. So let me figure out which is the wrong one, this one here. Okay, so when we have a look at this now, there's a number of things that, well, you'd want to watch. First of all, the open interest is not an issue because it's nowhere near as high as what I would want it to be to have a repeat of that one good event where we got a really, really good scalp. So open interest is not doing what I would want to do to make me want to trade the actual news event. Number two is we've had pretty erratic price action this week, where we had the fake move to just before, sorry, not fake move, but weekend move up here. Then we had our stop hunt up here. No, sorry, that's the week before. This week here. This is the weekend here. The stop hunt here to the upside. Our 3 hits to the low on Monday, created a W formation last night, and we've had our move to the upside out of that W formation. So the day trades are actually working pretty well right now. We can see that we have 3 hits to the low W, 3 hits to the high, looks like an M formation right now. But the problem that we have here is that, number one, could this be a higher time frame M formation forming right now as well? Yes, it could. Here's what I don't particularly like. Here's what I don't particularly like. If we are to continue to the upside today throughout the sessions that we have today leading up into the core CPI, then I think that either right before it or during it, we will probably have a bit of a shakeout. And the reason that I think that is because when I look at the heat maps, let me see if this is loading now. When I look at the heat maps, see this 2K order, this has been here for days, and that's sitting at 16,800 and it hasn't moved. Now we also have this here at 17,500, and currently we have a fairly high level long orders very close to price at 17,100. So here's what I kind of think based off that what may happen. 17,100, if that area holds, it's going to be somewhere around the weekend's LOD. And so that might mean that price comes back here to test that. Then we go up to the 17.5 region, which will take out a very high leverage of liquidity. Then maybe on the news event, it's potential we have a very sharp, if those orders are sitting there, you don't know who they are. So you don't know if it's someone who knows more than what we know. And maybe they're sitting there to pick up a very large stop hunt. I do find when we have CPI, sometimes you get these outrageous orders at really weird levels that are sort of feel a little bit extreme. And they don't always stay. So I wouldn't bank on that 16,800 levels actually being hit. But one possibility that we have, just because these longs are still sitting here at it's 17,100, as long as they stay there, then we would expect this move to just be a retracement back to the 50 EMA and to test the weekend's LOD, low of the day. And then potentially if we hold there, if that becomes Asia session initial low of the day, if we hold that, we may have a bit of a rally out to the 17.5. I personally would prefer not to do that because it would likely mean down from core from the CPI. However, it may not be that dramatically down. It may just end up being a retracement. It could be a quick, fast, false move. And then like I've just showed you on all those other things, a couple of hours later, it's done a full recovery. So even if this did play out, I wouldn't worry too much. But if we do get back to this 17.1-ish area and hold it, then there could be a long position for today to hopefully break through this level and get us to the 17.5. And that may, because we're in Asia session, we're a little bit lucky because we can trade Asia and UK and close out our trades before the news event. Whereas other sides of the world, they wake up UK, you don't really want to be trading UK before a news event. And then US will have to wait till the reaction actually happens, then they can trade after. So we're kind of okay because we do have 2 sessions basically to take a trade today if this 17.1 holds. However, because we have this potential M formation, even this higher time frame M formation, if we don't hold that 17.1, then it sucks, but there's a chance that we're going to have another move like this today. So, we've got Monday down, Monday night up. Like, we literally had the whole model play out in one day, which is a little bit crazy. Could have that crazy volatility today. I did post on my Twitter yesterday, I think it was yesterday morning or maybe the night before, that it was going to be a scalpers week. So I wouldn't even be trying to trade the weekly setup right now, the weekly setup being 3-day swing either way. I would just be scalping into these, have it closed out before the news event, see what happens, and then take a trade after that. Now, if we get good news out of it, it could be that something like this actually happens here. Do you know what I mean? Where maybe Asia and it's actually likely, where it's not likely. It's normal that during the few hours before a news event, if they happen around the UK session or just towards the end of the UK session, which I think this news event happens like between US changeover, but it's normal that UK just does nothing and it's very, very boring day. So there is another chance that it's boring, that this level here at 17.1 is our stop hunt at the news event, and then we rally after that. So I'm not saying necessarily when something like this will happen. You have to obviously watch the price action throughout the day, but the key is if we're going to have more upside, we don't want that 17.1 heat map orders to disappear because they're really quite large right now. They were 3K in the last 4-hour candle. They're now 2.6 in this 4-hour candle. So this is really the one to watch, in my opinion, because if we break that, there's really not much to stop it down to 16.8. Now, I want it to go to 16.8. So let me be clear on that. I actually want it to go to 16.8 because then it would mean that we will probably rally out of it, and that would be much better. But at this point in time, I don't have anything that's really showing me that that's going to happen. So it's all pending whether or not we hold the 17.1 region. So with that aside, let's just have a quick look at ETH. So ETH will be in the same story. If ETH holds the 50 EMA here, it's probably going to go up to these liquidation levels up here. It may come back to its previous high of the week at 13.05, but it's got really high liquidation levels beyond that as well. So 13.09, 13.20, 13.37. But the initial is going to be the 13.05. Let's see if we can get back there. It's looking at this point in time, it's obviously way too early to tell. We need more time. But at this point in time, it's looking like it doesn't want to come back into this candle zone here. If it does, that's fine, but we probably want to see it hold above 50% of that candle if we're going to have more upside. But again, if we have that upside before the news, then I think we're going to get our nasty stop hunt to the downside, either right before it or on it. If we get it right before it, then you know what's going to come out. If we get a nasty stop hunt right before the news comes out, then the market maker is building their long positions. They're trying to get you to go short. So yeah, just putting that out there. That's one kind of thing to watch out for. So there you go. That's that. I'm going to leave it there. I think that's all I got to say. Be sure to smash up the like button if you enjoyed this video. So sorry I couldn't do this live. I will try to figure it out, and hopefully we don't have any more disasters. Made me think, are we even in Mercury retrograde? Because it's just crazy right now. But enjoy your day and play it safe tonight. And don't forget, if you're confused about it, if you don't get it, don't worry, because I've just shown you can go back and back test yourself that picking the trend after the news is done is way easier than trying to pick it beforehand. Enjoy your day. See you tomorrow.